Establishing a startup in the gold industry requires strategic planning, deep knowledge of the market, and careful consideration of legal, financial, and operational aspects. Here's a step-by-step guide to help you. 1. Market research. Understand the gold industry. Study the local and international markets, including gold mining, refining, trading, logistics, and investment opportunities. Identify market gaps. Look for areas with untapped potential, such as digital trading platforms, logistics solutions, eco-friendly mining techniques, or innovative investment products like gold-backed financial instruments. Analyze competitors. Study existing companies, both local and global, and determine how you can differentiate your startup. 2. Develop a business plan. Define your niche. Will your startup focus on gold mining, trading, digital platforms, gold-backed financial products, or another area? M&GM's approach to digital precious metals platforms could inspire ideas. Create a value proposition. Highlight what sets your startup apart. This could be advanced technology, better customer service, a unique product, or a combination of these. Financial projections. Prepare financial models including revenue streams, cost structures, and profit margins. Ensure you consider gold price volatility, especially if you are in trading or investing. 3. Legal structure and compliance. Choose your business structure. Decide between a sole proprietorship, partnership, corporation, or LLC based on your business's size, goals, and risk exposure. Regulatory compliance. Ensure your startup complies with laws related to the gold industry, such as mining permits, import/export licenses, anti-money laundering, AML, regulations, and securities laws for investment products. In Egypt or the Middle East, you will need to align with local and international regulations. Secure licenses and permits. Depending on your focus, for example, mining, trading, you may need specific licenses from authorities, such as mining authorities or financial regulators. 4. Funding. Secure initial capital. Gold-related businesses often require substantial investment, whether for mining operations, trading platforms, or market-making activities. Consider angel investors, venture capital, or partnerships. Consider alternative funding options. Crowdfunding or issuing gold-backed tokens can be an innovative way to attract investment, especially for tech-driven projects. Monitor gold prices. The success of your business might heavily depend on fluctuations in gold prices. Incorporate hedging strategies to manage risks. 5. Build partnerships. Collaborate with industry experts. Consider partnerships with mining companies, banks, traders, logistics companies, or tech firms to build a comprehensive ecosystem. Leverage existing networks. If your startup focuses on trading or investment products, working with international gold suppliers or logistics firms for secure gold transport is essential. Tech partnerships. If you're creating a digital product, work with fintech developers, blockchain experts, or other technology partners to ensure the platform's reliability. 6. Operational setup. Set up operations. This includes securing physical premises for mining, refining, or storing gold, digital infrastructure for trading platforms, and logistics for the safe transport and storage of gold. Hiring. Build a team that includes industry experts, technologists, financial analysts, and legal advisors specializing in the gold industry. Technology integration. Use advanced technology like blockchain for transparency in trading or logistics, AI for predictive analytics, or online platforms to digitize gold investments. 7. Marketing and growth strategy. Branding. Position your startup as a trusted name in the gold industry, highlighting innovation, security, and reliability. Target audience. Identify key market segments, such as individual investors, institutional investors, or even the jewelry market, and tailor your offerings accordingly. Customer acquisition. Use digital marketing, social media, and industry events to raise awareness and attract customers or investors. Building trust is crucial, so content about gold investment safety, market trends, and wealth protection can help. 8. Launch and scale. Start small. Launch with a minimal viable product, MVP, whether it's a trading platform, a gold-backed financial product, or a small-scale mining operation. Monitor and adapt, continuously track market trends, customer feedback, and regulatory changes. Be ready to pivot or scale based on performance. Expand regionally or globally. Once established, consider expanding your services across regions like the Middle East, capitalizing on MNGM's focus on regional development. Pros of establishing a startup. 1. Innovation and creativity. Pro. Startups provide the freedom to explore new ideas, create innovative solutions, and bring unique products or services to the market. You can break away from traditional business models and introduce disruptive technology or processes. 1. Potential for high growth and profit. Pro. Startups, particularly in high-demand sectors, like tech, fintech, etc., can experience rapid growth, leading to significant financial returns if successful. Many startups aim to scale quickly and capture a large market share. 1. Independence and control. Pro. As a founder, you have the ability to make decisions and steer the company's direction. This can be a major motivator for entrepreneurs seeking autonomy and control over their business. 1. Personal fulfillment. Pro. Building a company from the ground up can provide immense personal satisfaction. Seeing your idea come to life, gaining market traction, and making a positive impact on customers or society can be deeply fulfilling. 1. Equity and wealth creation. Pro. As the owner or co-owner, you hold equity in the company. If the startup grows and succeeds, this equity can be highly valuable, especially if the company is acquired, goes public, or grows significantly over time. 1. Flexibility. Pro. Startups often allow for more flexibility in terms of working hours, work environment, and business strategies. Founders can implement modern practices like remote work, flat hierarchies, and innovative management styles. 1. Adaptability. Pro. Startups are generally more agile than established corporations. They can quickly pivot in response to market changes, new technology, or customer feedback without the bureaucracy larger organizations face. 1. Learning experience. Pro. Running a startup is an intense learning experience. Founders and early team members often gain broad skills in marketing, finance, leadership, operations, and industry-specific knowledge. Cons of establishing a startup. 1. High risk of failure. Con. The majority of startups fail within the first few years due to reasons like insufficient funding, poor market fit, or lack of experience. The risk of failure is high, and entrepreneurs must be prepared for challenges and setbacks. 1. Financial instability. Con. Startups often require a large initial capital investment and may not generate revenue for months or even years. Founders may face financial instability, often relying on personal savings or external funding with no guarantee of a return. 1. Long hours and high stress. Con. Running a startup demands a significant time commitment. Founders and key employees often work long hours, weekends, and holidays to get the company off the ground, which can lead to burnout and high stress levels. 1. Uncertain income. Con. In the early stages, founders may go without salaries or rely on minimal compensation. The uncertainty of cash flow can be a significant strain, especially if personal finances are involved. 1. Difficulty in securing funding. Con. Raising capital for a startup, especially in competitive or saturated markets, can be difficult. Entrepreneurs may struggle to secure funding from investors, banks, or other sources, which can limit their growth potential. 1. Lack of resources. Con. Startups often have limited resources, including money, personnel, and time. This means founders wear many hats, for example, CEO, marketer, salesperson, which can spread them too thin and lead to operational inefficiencies. 1. Constant pressure and responsibility. Con. As a startup founder, you bear full responsibility for the company's success or failure. This can create immense pressure, especially in managing teams, ensuring business continuity, and meeting investor expectations. 1. Market competition. Con. Startups often face fierce competition from established companies with greater resources and brand recognition. Competing in such a market can be daunting and may require more time and effort to gain traction. 1. Regulatory and legal challenges. Depending on the industry, especially regulated ones like finance, health, or gold trading, startups must navigate complex legal and regulatory requirements. Non-compliance can lead to fines, delays, or shutdowns. 1. Scaling challenges. Growing too fast without the right infrastructure or processes in place can lead to operational breakdowns, customer dissatisfaction, and reputational damage. Scaling a business effectively requires careful planning. Summary pros: freedom to innovate, potential for high growth and profit, control over decisions, personal fulfillment and wealth creation, flexibility and agility, learning opportunities. Cons: high risk of failure, financial instability and uncertain income, long hours and stress, difficulty securing funding, competition and scaling challenges, regulatory hurdle.